National home values have taken a dip for the first time in almost 2 years. So the question is, will it be any easier to buy a home this year? CoreLogic's Eliza Owen joins us now from Sydney. Eliza, thanks for joining us this morning. Good morning to you.
Good morning. Thanks for having me.
Okay, well, talk us through some of these figures because there's a fair bit to get through. What did we see in December?
As you say, nationally home values fell 0.1% in the month, though zooming out over the course of the year, they rose 4.9%. This is the first decline in 21 months, and it is largely being driven by Sydney and Melbourne, our largest housing markets. Sydney was down 0.6% in the month off the back of affordability challenges, and Melbourne is in its 9th consecutive month of decline, down 0.7%. Off the back of challenges in population, economic recovery, new taxes introduced for investors in the start of 2024, and also more housing supply delivered over the long term. So nationally, we're finally getting that decline, but it is largely being driven by just a few cities. We've still got strong growth in Brisbane, Adelaide and Perth, but even there, the pace of increases have been slowing down.
So is it that people just simply can't afford now that, with interest rates still being high, that people can't afford to buy a new home and to enter the market?
Yeah, that's a really good point. I think the dynamic we're seeing is partly the housing market kind of catching up with reality because the value of homes is just so far from where incomes are, from where interest rates would allow people to borrow. And it's all underscored by weaker economic conditions, cost of living challenges, and I think the prospect for a looser labour market in 2025, which would hurt demand as well. If you've been following monthly growth rates in the housing market, you can also see that it was largely slowing through the second half of 2024. So really, this decline is not a surprising result for December.
What about regional areas? What have we seen there?
So the regions have held up surprisingly well. They were still rising quite strongly over the quarter. And over the past year, regional home values have increased 6% compared to 4.5% across the capital cities. We're seeing a similar dynamic in rents as well, where rent growth has been slowing, but again, it's largely driven by Sydney and Melbourne, whereas the other cities and regions have seen a continued increase in rent values. So it does suggest that housing demand is still very strong outside of Sydney and Melbourne.
Yeah, some of the prices that we've seen over the year in the capitals, particularly Perth and Adelaide, have been pretty extraordinary still.
Yeah, so Perth is a really interesting one. It's had the largest annual growth of 19% in 2024. But it's worth noting that even there, the pace of growth has slowed slightly. So it's very clearly past a cyclical peak, with annual growth peaking back in July, the 12-month growth rate then sitting at about 24%. We're seeing the same thing in Adelaide, though it's not slowing quite as quickly. In fact, it's kind of overtaken as having the strongest quarterly growth in the fourth quarter of 24, sitting at 2.1%. And as you say, prices have risen substantially. The median dwelling value in both cities have overtaken Melbourne, sitting above $800,000. And we can probably expect continued increases in 2025 for those cities, albeit at a slightly lower rate.
And what else will we see across the rest of the country then as we go into 2025? What are you looking at, taking all of that into account?
It's really uncertain because there are so many headwinds and tailwinds, but I wouldn't be surprised to see the housing market continue to slow on a national basis for the first part of the year, or until we get some kind of relief from the RBA in terms of lower interest rates or even changes to lending conditions. For example, if APRA would consider reducing the serviceability buffer of 3 percentage points, but at the end of 2024, they did sort of reiterate the importance of that buffer, so it's probably unlikely that lending conditions are going to ease anytime soon. There are other headwinds for rental market demand, which could provide some reprieve to renters, namely the normalisation in net overseas migration. In the June quarter of 24, we saw that net overseas migration fell to about 65,000, following a peak of over 100,000 in the March quarter of 2023. So could be some further easing in the rental market as we progress through the year as well.
Eliza, if and when interest rates do get cut, could that then result eventually in house prices going back up again?
Yeah, you would have to imagine that it would provide some boost to buyer demand. But there are some other things to consider with that as well. We did see stage 3 tax cuts delivered through 2024, which should have boosted borrowing capacity and housing demand. Instead, housing demand continued to slow. The other thing about a rate cutting cycle is that it probably won't bring us back to the pre-COVID decade average with a cash rate of 2.6%. Forecasters are putting the cash rate between 3.6% and 3.1% at the end of 2025. So I think there is some limit to how much rate relief could boost the housing market, and people may have already priced that into their purchasing decisions throughout 2024. So there is some uncertainty there as well.